If you're like most buyers, you probably heard a lot of different answers. Some people say you need 20% down. Others say you can buy with almost nothing down. And somewhere in the middle is the truth. The reality is that the amount of money you need depends on several factors, including the type of loan you use, the price of the home, your credit profile, and whether you qualify for any special programs. The good news? Most buyers need significantly less money than they think they need. And that's especially true for many first-time buyers. I'm Boyice Williams with eXp Realty, and my goal is helping you make the right move. Let's break down exactly what you should expect when buying a home in Hugo, Minnesota. The first thing most people think about is the down payment. And this is where one of the biggest myths in real estate shows up. Many buyers believe they must have 20% down before they can purchase a home. That simply isn't true. While putting 20% down can eliminate mortgage insurance and lower your monthly payment, it's not required for most home buyers. In fact, there are loan programs that allow qualified buyers to purchase with much less. Some conventional loans may allow qualified buyers to purchase with as little as 3% down. FHA loans often require around 3.5% down. VA loans for eligible veterans and active duty military members may allow qualified buyers to purchase with no down payment at all. USDA financing may also be available in certain eligible areas. The key takeaway is this: don't assume you need 20% down before talking with a lender. You may have more options than you realize. Now let's talk about something many buyers forget to budget for: closing costs. Closing costs are separate from your down payment and can include lender's fees, title fees, escrow expenses, recording fees, prepaid taxes, prepaid insurance, and other transaction-related expenses. While the exact amount varies, many buyers should plan for additional funds beyond their down payment to cover these expenses. This is one reason why it's important to understand the full picture rather than focusing solely on the down payment. Next, let's talk about earnest money. Earnest money is a deposit you submit when making an offer on a home. Think of it as showing the seller you're serious about purchasing the property. The amount varies depending on the home and market conditions, but it's something buyers should be prepared for when they begin making offers. The good news is that earnest money is typically credited toward your purchase at closing. Now let's talk about reserves. Just because you can spend every dollar in your savings account doesn't mean that you should. I always encourage buyers to keep some money available after closing. Moving costs money. Unexpected repairs happen. Furniture costs money. Life. One of the biggest mistakes I see is buyers using every available dollar to purchase the home and then having no financial cushion afterward. Home ownership is much less stressful when you have some reserves available. Let's look at a simple example. Suppose you're purchasing a $450,000 home in Hugo. Depending on the financing program, your required cash could look very different from another buyer purchasing the exact same property. One buyer may use a low down payment program, another may put down 10%, and another may put down 20%. Each scenario creates different monthly payments and different cash requirements. That's why there is no one-size-fits-all answer. Your best strategy depends on your goals. Another thing that buyers often don't realize is that seller concessions may sometimes help offset certain closing costs. While market conditions vary, there are situations where buyers can negotiate assistance from sellers as part of the transaction. This is another reason working with an experienced real estate professional can be valuable. There may be opportunities available that you weren't aware of. Now let's address the question many people are really asking. What if I don't have a huge amount saved? Don't assume home ownership is out of reach. I've worked with buyers who thought they needed years more of savings before they could buy. Then they discovered they qualified much sooner than they expected. The first step isn't guessing. The first step is getting accurate information. That's why I recommend talking with a trusted lender early in the process. A lender can help you understand your financing options, estimate your monthly payment, and identify exactly how much money you'll need based on your situation. That removes the guesswork. And once you know your numbers, the process becomes much less intimidating. One thing I've learned after helping buyers for years is that uncertainty often stops people from moving forward. Not because they can't buy, but because they don't know if they can buy. There's a big difference. Clarity creates confidence, and confidence helps people make good decisions. If you're thinking about buying a home in Hugo, White Bear Lake, or anywhere in the Northeast Metro, I'd be happy to help you understand your options and connect you with a great lending resource. No pressure, no obligation, just answers. Quick question for you. What's the biggest concern you have about buying a home? Saving for a down payment? Monthly payments? Your credit score? Finding the right home? Drop your answer in the comments. I'd love to hear where you are in this process. If you'd like a step-by-step plan for buying a home in today's market, message me back with the word buy, and I'll send you my Buyer Smart Plan to help you make the right move.